I'm based in the U.S., but I'm a little interested in the U.S. because I was born in the Midwest, so in the middle of the country, and then I moved to the South when I was in high school. Um, that was an interesting culture shock. The South is a very nice place, but also a very interesting place for a black man in America.
I intuitively feel that the places where we grow, especially our formative years and our teenage years, right? Whether we like it or not, it leaves a really strong imprint on who we become in a way. Give us a rundown of what Velo and Aero does so that we can segue into 40 acres.
Sweet. So Velodrome, Aerodrome are V303 DEXs, just simply put they're DEXs that have a very unique incentivization setup. So if you are if you're just a trader, you just come there, you swap, everything's fine for you. There's nothing different. It's just like every other DEX, just like Uniswap for you.
If I won't put my money on it, right, I can't tell someone else to do the same.
I think it's really true, but it's also like, it is interesting when you tell people about what else is out there for fee generation. And where like you're earning in DeFi, we'll just say not fee generation.
What makes 40 acres different from DeFi lending platform like Aave or Compound?
So the first thing is we accept NFTs as collateral. The second thing is we're a peer-to-pool model, so we're similar to money markets, but more like a pool-to-pool model. But the big difference is we're non-liquidating. So on Aave, Morpho, Moonwell, I think those are the three on base right now.
The more I feel that TradFi comes in, they want to see yield, right? And that's the top performing yield project in whole of Web3 and DeFi.
I think you're right. I think the market will be dumber than we think for longer than we think. That's my only thought. But it would speculative moment here. I think they will unseat Uniswap in the next 12 months.
It's really helpful to have a tutorial hand down, and it makes so much sense. So we create a lot more value for our viewers and you for your users by doing that. Welcome to Digital Dunya podcast. We've got an amazing guest with us today. 40 Acres is a name that if you don't know now, very likely if you're in Aerodrome ecosystem, you won't be able to miss in time to come. I've personally used the project and it looks really exciting. Been part of Aerodrome community since the inception. So I understand protocol quite well, and what 40 Acres has created is something that I was intuitive waiting for someone to create. So without any delay, let's invite Chris in. Hi, Chris.
Hey, how you doing, Lou?
I'm very well, very well. Thank you for joining us at Digital Dunya. Just FYI, a trivia. Do you know what Dunya stands for?
No, I don't. I don't know.
Universe.
Oh, okay. That makes sense.
Yeah. Welcome to Digital Universe.
Okay. Cool. Yeah. That's pretty cool.
So normally, we don't have any set agendas. We do a lot of meandering, a lot of searching, jumping from one place to another. So feel free to drop in whatever you think is relevant or important or you want to share. Okay. So before we start, tell us about yourself. What's been your journey? Where did you grow up? And where did you come into your own?
Okay. You go all the way back. I'm based in the U.S., but I'm a little interested in the U.S. because I was born in the Midwest, so in the middle of the country, and then I moved to the South when I was in high school. That was an interesting culture shock. The South is a very nice place, but also a very interesting place for a black man in America. And so that was an interesting just moment in life. And then from there, I went to school actually for chemistry and engineering. So then, so all my training, everything I've done has not been in the financial world. So like DeFi is not what I was formally trained in. I was trained in engineering. I learned how to code poorly, but I learned how to code while I was in grad school and undergrad. And I was trained to be a nuclear engineer until I got the Bitcoin bug in 2016 or 2017, somewhere in there. So that's where I made the big jump from training to be a nuclear engineer and go like make fake bombs and detectors that track bombs and all that stuff. Like I had all these projects on plutonium and things. And I quit that in 2017 and joined a really small startup called BTC Media at the time. I think they just go by Bitcoin Inc. now. They do all the conferences, like the big Bitcoin Miami conference, Bitcoin, I think they did San Francisco recently. I don't remember where they do it, but basically I helped them build out what they do now for conferences. And so they hired me as a software developer at first, and they realized, as I already knew, I'm not a very good software developer. So I learned how to sell all their ads while I was there. And so I became their sales guy in BD, but just sales. Just I was slinging ads everywhere. And so I did conference ads. I did ads on their website and stuff like that. And to build up the sales team there. And then from there, I did a few startups that didn't go anywhere. One was in payroll in 2019. And that was well before the stablecoin market like became what it is today. I was too early, as they say. And then from the stablecoins payroll stuff, I found DeFi Pulse, which was the guys who created TVL and was the first DeFi llama. They don't exist anymore today, unfortunately, but a really great learning experience there. Did sales and revenue stuff for them, like selling ads, getting partnerships together, et cetera, et cetera. And then from that, I met who did I meet? I met the Premia Finance. They just pivoted to be called Cayenne, like rebranded to be called Cayenne, but they do on-chain options. And I got burned a lot. I don't know what year this was, but whatever. Whenever Ribbon was doing their covered call vaults, I didn't understand like options, and that's like my real DeFi moment. And I just got rinsed in that thing because I wasn't hedging right. I was just like, oh, cash flow for my ETH, awesome, amazing. And turns out like you're taking a lot of risk. And so learned a lot about that. Me and a friend built out, safer structured products, or like less risk structured products, which means you make less money. But we worked with Premia to make that happen. And then I got the Aerodrome moment. I was in Velodrome, Aerodrome. I was following InfoGuild from in my free time, and made the big leap, I guess, to do 40 acres earlier this year after being in the community for almost 2 or 3 years, however long Velodrome's been existed. So I've been in the community. And I thought it was something we needed. I thought I had the right people to build it, and turns out we did. And we're still building things every day right now. It's not a finished product, but it's been really cool to see the growth and the support we've had. I think right now we manage a little under 3% of all of the vAero positions. We manage a little under, I actually think we manage about 8% of all vVelo, 8% of vFAR, and we'll have a few more on the docket here soon that we hope to get around 5 to 10% market share in. So love what we're doing right now.
Chris, you've given us a really good capsule from where you started and where you are. So I'm going to try and open up each thread individually to learn a little bit more about you now to start. I intuitively feel that the places where we grow, especially our formative years and our teenage years, right? Whether we like it or not, it leaves a really strong imprint on who we become in a way. Right. So 2 places from your childhood and your growing up, your university time, any cities or any places comes to your mind?
Oh, well, I went to undergrad in a really, really small place. Like you'll never, not that you won't ever have heard of it, but South Carolina State, there's the big state school called University of South Carolina, which is always confused with where I went, but it's in Orangeburg, South Carolina. I used to know the population, but it's maybe like 20,000 people. It's like really small. And so I think about that place all the time because it's like I started from this very rural, I started my adulthood from a very rural place. I didn't know I was going to go there until 3 days before school started. And like all these moments there of just being like, wow. I mean, I think about this now. It's like that's been almost 10 years ago, 15 since I graduated. So like 15 years ago since I got there. Where it's like, wow, I started from this really small place in the South and I've gotten to go explore lots of stuff due to crypto, due to nuclear engineering, just due to like the expansion of the world. And I'm really glad about that. So I think about that and giving me a lot of, life experiences when I was there. And then when I went to grad school, this is another place I think about a lot for growing up is Knoxville, Tennessee. I went to grad school at UTK Knoxville or UT Knoxville. And that was really cool because that's when I actually saw all the other things you could do in the world. Not just, I was mainly focused on nuclear engineering, but I got to go take classes in the B school, so business school. And that's where I found out about crypto and found out about Bitcoin, changing supply chain. And that didn't really happen, but it's it's okay. It's what got me down the rabbit hole. And so it really both those experiences. I mean, I'm not saying I was like a straight A student or anything by any means, but they gave me breath in a way that one gave me breath in like meeting a variety of people and understanding how more people in the world work than just like my small community I was living in the Midwest and then in the South for a bit. And then Knoxville showed me like there's a lot more that you can do than just like go to a lab and work. So yeah,
that's really interesting because that's your experience down south. What do you connect strongly with Midwest from your time in the Midwest?
I don't know. That's an interesting question because the Midwest, I was there from like when I wasn't born there, but I was there from like a really young age, like 3 or 4, until I was like 16 or 17, 16 or 17, something like that. And so it was a formative moment. It's just mainly, I don't know if this is fine. This is what I'm going to say anyways. It got me used to being around white people. And then when I left to go to the South, it's predominantly different. The demographics are different. But no, I mean, it was really just very wholesome. The Midwest, I've gone back. My sister lives there now. It's just a very different, wholesome moment where everyone feels like they know each other in a more than like a more in-depth way, at least your neighbors. Sometimes in the South, we were very nice to your face, but just like not very deep with our relationships. So that's a people thing, I guess.
So help me understand, right? So would Colorado, Denver be Midwest or no?
It's on the Colorado is its own thing because it's like the mountains. So yeah, I wouldn't call Colorado the Midwest. It starts to be like the Southwest at that point. But like Indiana, Illinois, Michigan, Ohio, you maybe even say Kansas. That might be they might controversial there. Missouri. Yeah, those are kind of like the flyover states. Yeah, I mean, I'm missing some in there, but those are all. That's the fact. I'm missing them means that they're flyover states. Yeah,
I really feel like every time we do a podcast with founder or any new project or an existing project, I like to understand geography because I feel that subconsciously our geography plays a huge role in what we become, what we believe in, and what we choose to do, right? It's not in your head, but subconsciously, it plays its part. So that's why I wanted to capture that. So now, moving on. So you mentioned you found or you discovered Bitcoin around 2016, 17, which is probably around the time when I discovered Ethereum, right? So I feel that so I think everyone, I relate this. I've got 2 hooks. So there's a Bitcoin and there's a Ethereum. So everyone has got their own unique Bitcoin and Ethereum story, right? So what is your first Ethereum story when you discovered
first Ethereum story? Oh man. Trying to participate in ICOs and just getting no allocations to them in 2017. And then Bitcoin Magazine, or BTC Media, they launched their own token on Ethereum. And that's when I had to figure out what the heck was going on. Those were my first 2 moments. I was not a good trader. Didn't get into any sexy ICOs or anything. I think, so that's probably my first Ethereum moment. Yeah.
It's what you are doing currently. I intuitively know is really strong and deep, be it with 40 acres. And I like to believe that I'm super bullish from a fundamental point of view with Aerodrome, Velodrome, MetaDex. And looking at that view, I feel that 40 acres is likely to become something really huge within that community, right? So I'm super excited. I'm already sold. So I'm not your sales guy, but you've got an advocate in me.
Okay, good. I hope it goes well. Me and all of us have quit our jobs now. We are all full-time employees of 40 acres, self-funded so far, and it's been quite the journey. Let's say that. So quite the journey so far. I guess it's been about a year. We've been working on it for a year, but it's been public for 7 months.
And it's funny how your journey, starting from nuclear exploration or research that you wanted to do, and then with the whole arc till here so far with 40 acre, I feel that my journey, I'm trying to connect it with yours. I've always been in TradFi, so over 20 years. Okay. I worked in TradFi for 20 years, done everything from investments to pension funds to insurance. And I studied that. I come from a family which has been in finance for 3 generations. And I feel that now with what I'm doing, right, it's been my calling, right? So because I understand the finance aspect so much, and I've made my hard yard. I'm constantly learning with the tech part. So I feel that this is my calling in the sense that I get to do the stories. I get to cover what people are building because it just gives me the high. And I understand, fortunately, the finance aspect and the tech aspect. So it makes it even more interesting for me.
That's awesome. Yeah. It's, I don't remember the quote, but it's basically if you want to learn or like get to know people in the space, you interview them or you write about them, either or. And you're doing the interview side of it. And so you get to meet a ton of cool people. Most likely, I think you're doing a good job of hustling through meet people. And then you also get to learn a lot more, I mean, hands-on, but just like from the source. That's a better way of putting it, from the source. So, yeah.
We've started Digital Dunya newsletter predominantly for...
Oh, okay. I didn't even know that. My bad.
and it's purely to the TradFi guys, right? So the newsletter is not tailored for Web3 community because they are already sold. They already know about it. But how do we get TradFi? So in Australia, in India, wherever our reach is, right? And we are growing. So we do 3 newsletters every week. So I love it. I couldn't have asked anything better.
And as you said that, I skipped over this because it wasn't crypto. I had another startup, which was a newsletter for Black millennials. Basically, it was like the party scene for Nashville, Tennessee, where I was living at the time. And I had to do 1 a week. I can't imagine doing 3 a week. That's a lot of effort. We didn't have AI. We didn't have AI at the time, obviously, but that's a lot of work, man. That's impressive, writing that much.
The fun part is like, my friends and my wife, she feels that I'm likely to burn out. And I'm like, I'm having fun. It's like kid in a playground, right? So it's not work for me. It's not that I feel I have to do this. I enjoy doing it.
Yeah, that's good. That's good.
Well, moving on now, as we get into the segment where we talk about 40 Acre, it's very important to get the premise. So I heard you mentioned that you've been part of Velodrome community since inception. Is that right?
Yeah, I bought some at the very beginning. Then I bought like my real position maybe 6 months after they launched. So, yeah.
Cool. So another common story between you and me, I was part of Velodrome from day one because I got a nice airdrop because of Curve and Convex finance. And so I was a huge, huge Curve Convex maxi back at the time. That's the term we used to use back in 2020, 2021. And I joined in a little bit later, but because of that, Velo happened, and because of Velo, Aero happened to me. And I would have never imagined my trajectory with Curve Convex. This is where I would be talking to you.
Yeah, no, it was Aerodrome, Velodrome, both have just been insane if you've been around for a long time with them. So it's been a really cool experience to ride up with them. Not even price, just like the progress of everything.
I purely think value creation is the game. That's how I'm bent. That's how I see things, right? Unfortunately, sometimes I find myself isolated because of that thought process. But if value creation is taken care of, everything else takes care of itself. So you don't have to worry about the price, right?
Very much
because
so. Very much so. You have a good asset. Yeah. Go ahead.
Chris, give us a rundown of what Velo and Aero does so that we can segue into 40 Acres.
Sweet. So Velodrome, Aerodrome are V303 DEXs, just simply put they're DEXs that have a very unique incentivization setup. So if you are if you're just a trader, you just come there, you swap, everything's fine for you. There's nothing different. It's just like every other DEX, just like Uniswap for you. If you are a LPer, you have the option to participate in the tokenomics of Aerodrome, where when you LP, or Aerodrome or Velodrome, sorry, I'm trying to use both of them. When you LP, you're able to either receive your fees like you normally would, or you can receive Aerodrome tokens instead at usually a much higher APR, which incentivizes you to create deep liquidity on Aerodrome or Velodrome. And then if you are a V-Aero holder, which is the staked version of Aerodrome, or V-Velo, which is the staked version of Velodrome, you lock up for a long time, 4 years. But for you doing that and trusting the system, you receive rewards and any bribes that happen each week to the various pools on the DEXs that I mentioned. The system is really beautiful because it uses a small amount of inflation to incentivize a lot more economic value in return or value creation in return for it. And as long as you are participating in the ecosystem, you will basically not get diluted throughout that time. But if you stop, that's when you have issues. But as long as you're either staking continuously or participating as an LP and earning some of those emissions, you're doing a great job in this regard. That's the quick overview of all the different parts of Aerodrome. If we want to go like into the flywheel, that's a little bit more in depth there.
No, that's really good. The only thing I've been trying to make an effort from my end, we've been covering Aerodrome since I started Digital Dunya 2 years ago. And I always make sure that I use words fee instead of rewards and bribes, because I feel that it just does not, most people, because it's actual fees. So owning Velodrome or Aerodrome in your portfolio and staking it, you are becoming part of the system. And as a contribution, you get fees for participating. And that fees is really generated by people trading on it, right? So I've got a connotation. I had issue with curve and convex war, right? Curve wars, because it creates a different connotation in brain, right? When I'm saying fees, it's actually someone is doing a transaction and I'm facilitating that transaction as a part of the project, and we get to earn that fees. So it's more right.
It is more right. I think the big thing for I won't speak for the Aerodrome team. I will just speculate. And a lot of people, other teams, a lot of them are European or US based, and we could not say fees for a long time until about this year. We couldn't say fees. We had to say rewards. We had to say incentives. I don't think we could say bribes legally until this year either. So it is old habits die hard. So yes, definitely it's fees that are uncorrelated is the big thing I always think about, uncorrelated to the price of Aerodrome or the price of Velodrome. And that has been unbelievable. Unique properties, because a lot of other protocols, whether it's Uniswap or others, they provide rewards. I'll use the right rewards or fees. Well, they're not really fees, but fees in their native asset, which is just emission in the worst way possible.
Is there anything you want to cover from Velodrome, Aerodrome mechanics side, so that we can segue into 40 acres?
Yeah. So let's go a little deeper on the vAero, vVelo holders. So
Sure.
For simplicity, I'm going to call them vNFT holders. So the position when you have a staked vAero, vVelo is called a vNFT. It represents your total position. And it is a transferable, which is a big difference between Curve, but transferable NFT that whatever wallet the NFT is in, whatever wallet NFT is in, will receive those fees for that week, for that epoch or those weeks that you voted on. So it's really beautiful because you can transfer that now. And so it's not just locked to one wallet. However, the fact is in these big block NFTs, where like you could have a position that's worth, represents $1 million worth of Aero, it's very difficult to sell that. You can't break it up into little smaller pieces. And so there is, it's created this issue of secondary liquidity market. So like right now, you can't go to Aerodrome and swap your vAero for, USDC in an easy single transaction, or like where you want to swap 25% of your vNFT. You can't do that. And so there's secondary markets like I think there's OpenX Swap, there's Vexy, there's soon to be our marketplace where you can sell it in a big block and there's buyers that will come buy it at a discount. What we did at 40 acres, and I'm just going to transition to 40 acres, is we made it easier. We made it possible, not even easier. We made it possible for you to now use this VNFT as collateral for a loan, which now gives you liquidity without the risk of liquidation as well. So we provide you liquidity. You use the fees that you're going to earn each week to repay that loan. And then we have set up pretty tight risk parameters so that you are not able to go too far off the I don't know how to say it. Become too risky. Let's say become too risky, and we make it so it's non-liquidating in that case. We project everything based on the underlying fees each week, and so that allows us to have a really good forecasting on what the actual projected fees will be for the future, and then you can just use historical as well to give a good idea of that. And luckily for us, Aerodrome, Velodrome, and all the other V303 dexes, they do a really nice, beautiful thing where they're pretty cyclical and they follow the market. You can basically look at their historical data and see what's happening in the market at the same time. And so as you see these uptrends, that means the market is kind of topping or beginning to peak, whatever. And then as you see it flatten out or plateau, either market is hopefully crabbing or we're about to have a very hard downtrend. But because of that, it lets us know pretty confidently when what we should be underwriting these loans under for. So that was like a lot, and we can dive a little deeper into any point that I might have gone a little too high level with, or not too deep on.
Oh, yeah. So how about I'll summarize what I understood, right? And if I've missed anything, feel free to jump in and help me finish off the loop.
This is more fun.
The way I would say is like, anyone buying aerodrome or velodrome, most likely a big chunk of that user is not buying for speculation. They're buying to generate fees or earn fees, right? Mm-hmm. Because by owning those tokens, you get right in the revenue that the project is generating. So how do you get that right? So if you bought, or anyone ends up buying X amount of aerodrome or velodrome token, they can then go and lock that token for 4 years, which gives them right to the fees and revenue that project is generating.
Yes.
So that's a really good function coming from Curve and Convex or Uniswap.
Yes.
Right. So it was a major upgrade. Now, the challenge is that, say, for example, someone has got a $10 million position in Aerodrome, right? They are locked for 4 years. And if they need to pay bills for their office, or they need to go out and hire an employee, and they don't want to sell the position, provided someone is willing to buy 10 million at a discounted price, right? That's possibility. Very unlikely because market is still growing, but there's a possibility. But I don't want to liquidate myself. I just want to pay for an employee for 12 months. So that was a big gap in market. And I was constantly thinking, because I wear my financial TradFi hat, and I'm like, this is a really amazing opportunity. So that's where 40 Acres comes in, saying that we will give you loan against your $10 million position of Aerodrome, and you can do.
So I want to actually pause there. I want to pause there real quick. So 2 things that you said that were really important. There was no facility to borrow against your vAero position, or like borrow against any VNFT position using it as collateral until we existed. So the reason, like, to give some more context on that, so because we keep talking about liquidity, if you use like Aave or more, like Arrow is big enough that it should be on these big lending platforms.
Yes.
Like the Arrow is it's a solid asset. It's like good.
Yes.
It's in the top 100, it would be top 150, whatever market cap token. It's a good token, and it's a good product and good platform. And so when you go to like Aave, you go to Morpho, you go to Moonwell, you go to any other traditional money market in the space. The biggest thing is they care excessively, like extremely. All they care about is how quick can they liquidate, whether it be an auction style, whether it be, I think it's atomic liquidation on Morpho, so like instant liquidations. And so all these things are like, how do we make sure that we don't ever have bad debt, which is a really good problem, like a really good thing to be focused on from a risk perspective if you're lending stuff out. However, the VNFTs, as we were talking about, there is no way to do instant or like atomic liquidation, because you don't know if someone's going to buy a 10 million block of Arrow that's locked for 4 years. You don't know, you don't have the ability to sell smaller pieces of that block. If, say, the loan is only worth $20,000 but the collateral is 10 million, and you somehow don't repay it, if it's a duration-based loan, you don't repay it in time, you have to sell the whole block to return that. It doesn't make any sense. And so the next part is, say, how do we make this collateral that's good collateral, produces a really good predictable yield? How do we get it so we can say this is collateral that we trust, and we are underwriting some amount of money for loans in an easy to understand way, in a way that is safe to the lender as well? And that's where we use you said we use the vAero as like a collateral, but it's more like we're using the vAero's cash flow as collateral. We think about it like that. The price does matter, but the price really doesn't matter. It's about how many dollars per week is each Arrow earning, how many dollars per week in fees is each Arrow earning, is what we're really, really looking at. That's the real like crux of the problem. It's kind of changing it, or maybe not flipping it, but definitely inverting how you're thinking about it as a collateral type. So I think you were doing great though otherwise.
Yeah, and that completely makes sense, because I personally feel that most asset currently in the market is not as solid as Arrow or Velo, because they are generating cash flow from day one. So if you are a user, if you are a market maker, if you want to provide liquidity, or you want to use it as a collateral, it is much more efficient asset than anything else that I know of on the market.
Very much so. Very much so.
Yeah.
It's,
So
yeah.
it,
I'm glad.
we both, I think for our listeners, we both had a moment where we chuckled because it's so obvious that it's there, but most people don't get it.
Yeah. So I have a unique, you probably are looking at this too, but a lot of people, if you're not looking at the V3 of 3 space, you're like, oh, there's a whole bunch of them. Oh, they're all producing good yields. I was laughing in my head because it's like the yield is really good and it's a really good, like, strong and predictable, right? But all the other V3 of 3s are not as predictable. They're not as strong. And Velodrome is on par with everyone else, like the average V3 of 3 DEX. But Aerodrome is like almost an order of magnitude larger than everyone and like 3x larger than its competitor in fees distributed each week. Its closest competitor. And it's just like, so many people don't realize just how much revenue they're pushing back to the token holders each week. Because you see, like Aave will say they've made, I don't know, $10-15 million or something in a month, and none of that goes to token holders. Whatchamacallit? Not Curve. Curve does do since
MKR, make it out.
MKR, make it out, making 10, 15. They're probably making a lot more than that actually, but a lot of millions of dollars. It doesn't go back to their token holders. Not saying they need to do that. They're using it pretty effectively, honestly, but it changes the dynamics of why you have a token, why your token is valuable. It really makes you think about like how you can. It becomes closer to TradFi. That's the easiest way. It becomes closer to TradFi in the way you think about it, which is really cool and also a little scary, but like a libertarian moment. But we're starting to merge back into TradFi and DeFi meeting again, which is cool though. That is cool. So it's a lot. I love it.
On a side note, probably you will get it much more than anyone else. The last role that I finished off to start Digital Dunya 2 years ago, I was risk and compliance advisor for investments, right? So when I wear my hat and I see Aerodrome and Velodrome or V3 DEX, it makes it so hard to make a case for something else, because there is nothing in DeFi that makes such a strong case with cash flow and revenue.
Very true. Very true. It's I don't think there's anything else that makes that.
No.
Yeah.
So if someone comes to me from an education point of view or learning point of view, I can talk about Curve, Convex, Uniswap, Aerodrome. And if I wear my risk and compliance hat for making an investment choice, everything falls off because of Aerodrome. Because if I won't put my money on it, right, I can't tell someone else to do the same.
Yeah. Right? Well, you're a good risk and compliance guy, if that's the case. I think that's really true, but it's also like, it is interesting when you tell people about what else is out there for fee generation, and where like you're earning in DeFi, we'll just say not fee generation, but earning in DeFi, and you're like, everyone sees these 100% APY or whatever on, like, it could be even Aerodrome, it could be Aerodrome, Uniswap, wherever, and it's very it's like snake oil, because LPing, you have IL, you got it's gotta stay in the range now. You sort of have to hedge if you really are like wanting to do this for real, and but no one knows that. They just see the beautiful number, and then you also are like very highly correlated to what's happening with those two assets you're trading on. Aerodrome, on the other hand, and those like it, I love it because it's just like I get a little piece of all the fees if I want to, and usually that's a pretty good APR, honestly. And then even if the price goes up and down, Aerodrome, we're just talking about Aerodrome a lot. They're winning. They have like, I think like 45% market share or something on a base. And so they're doing amazing volume and all this good stuff and fees. And so you're in an amazing place from a risk perspective, because they're tied very deeply to Coinbase, to have a asset that has uncorrelated fees, a return. And then, that uncorrelated return gets you access, if you want it to the broader market. Like that's also great. It's not just, you don't have to just get cash, like US dollars or USDC. You can just be like dollar cost averaging a BTC and ETH every week. You can be dollar cost averaging into some crap coin, meme coin or whatever, if you think it's the next big meme coin. But it's like, it's so many options you can do with it. It's so cool. I love it. Yeah.
And I think, like, I've reached to a point where I acknowledge that we both cannot stop talking about Aerodrome. So I think we will park that for now and move on to 40 acres, right? Because that's the star event for today.
This is just an aerodrome love podcast. We just love it, it's a romantic podcast. But yeah, we could talk more about 40 acres. Where do you want to go with 40 acres?
So the start of the show is 40 acres. Just to reconfirm that we are here to talk about 40 acres.
We're here talking about aerodrome. We're aerodrome fanboys over here. It's all good. It's all good. But yeah, so 40 acres.
Yeah. So your first question, right? So what problem does 40 acres solve for the people who hold Way NFT, and why is it important?
So we solve a liquidity issue. We provide them with 25 to 30% of their total asset value in loans instantly. And those are repaid. It's a self-repaying loan. It's a non-liquidating loan. There's no extra interest on the loan. So everything we do is repaid from the fees that you make each week. The reason this is really important, it gives people an option to not have to sell their position if they need a liquid, a large lump sum of money quickly. So some of my favorite things that people have done is one guy helped pay for his dad's medical bill with his VNFT. He needed $10,000 and on a $30,000 position or something like that. And he paid for the medical bills. He's like, this was awesome. I would have had to take out another loan or figure out something else, and it wouldn't have worked out. Another guy bought a car. So other people have put down payments on their house using us as well. So super cool use cases. And those are my favorite. Then there's people that are traders, and until recently, VAero, VVelo, VNFTs in general were pet rocks they produced a good yield, but you couldn't use them to what they call lever up or for leverage. So some people on our platform do what we call short-term loans, and they'll take a loan out for less than epoch, so less than the cycle we would get to have to repay rewards. They do have to pay a small fee for that, but they'll take out a loan and then they'll go trade on that loan or those dollars they took out, and then they'll repay that very quickly. So it's short-term leverage. It's non-liquidating, so it's really safe. So just in case, say something happens and they have a bad trade, most of them have bad trades, and so they're like, oh man, I can't repay in the cheaper fees. They're not going to get liquidated if the market goes against them. They're not going to have any issues with the repayment of that loan at any time. It'll repay itself. It may take some time, but it'll repay itself for them. And if they want to, they can tap that credit line after the one repayment cycle and try to get it all back in one trade. But we have a lot of people that are doing using it to lever up on trades. And then also there's some people more recently that we've been working with to use their credit line on their NFTs to buy more Aero, more Velo, more whatever VNFT they want, so they can get more of that asset and create a bigger position, a little bit with a light leverage, like 1.5 or 1.25 or 1.25. So yeah, super cool stuff.
And that makes sense, right? So when I discovered 40 acres, thanks to Token Price, credit where credit is due.
Cool.
I've been a follower and admirer of his work for the last 5 years, right? So,
is he an OG convex curve guy?
Yes.
Right. Yeah. Okay.
So, where I'm sitting today, in a funny event, how things connect, Token Price has played a significant role because I started off my curve and convex journey because of his write-ups, right? So he used to,
really? Okay.
Yeah, and most people around me find it very difficult to read him because he would write really long. And I would enjoy it because it gives me a really good context of what's happening, right? I really want to understand what a project is doing. So I need a lot of details. And I just don't want to skim over and get just an idea. So his writing is for all our viewers. If you want to check out, it's still available. We'll put up some links over here. So, FYI, do check it out. So what I wanted to, coming back to, VAero position purely, is as you are saying that people can use it for XYZ, whatever reason they have, be it investment leverage, holiday, car, medical bills, buying a home, any purpose can be solved. And as of today, while we are recording, roughly Aerodrome market cap of VAero locked is close to $1 billion, right?
Yep.
So that's your target market, Chris. Am I right? Potential target market for liquidity that we can generate loans.
Yeah, so we target we target vAero, vVelo. Aerodrome is by far the biggest. Velodrome is a sister protocol of Aerodrome, and we're now looking at starting to expand out to other markets. We started with Vero Exchange on Avalanche. They were doing really good numbers when we actually launched. They're still doing good numbers now. Another one that we're going to be adding is Black Hole. We're also getting geared up for the new iteration, I guess, of VNFTs, the X3 of 3 on Shadow, Etherex, which is by Joe Lubin. So there's a ton of little caveats that are different, but Aerodrome by far is our biggest market. Aerodrome is the one that we want to be the dominant player in and get closer. Right now we're like 2.5, 2.7, depending on the day. We want to get closer to 10% of the market share. And we think we have the ability to do that. We've got some great partners lining up right now. There's a ton of, we'll say, built up demand for buying vAero or buying Aerodrome and locking it. There's some funds that are looking to start levering up as well on their position. So super cool time. But yeah, Aerodrome, VNFT users are our target market.
Because the way I'm seeing it, right, and probably you'll get more excited with what you're doing with 40 acres, is I see that $1 billion in Aero NFT, currently roughly give or take, is likely to be 5 to 10x in 12 to 24 months time.
Oh, wow. I would love that. Yes.
And that's not coming from a speculation point of view. I'm thinking purely from a data point of view, the kind of fees they are generating, right? And if the more I feel that TradFi comes in, they want to see yield, right? And that's the top performing yield project in whole of Web3 and DeFi.
Okay. I think you're right. I think the market will be dumber than we think for longer than we think. That's my only thought. But it would the speculative moment here. I think they will unseat Uniswap in the next 12 months. Like I think that they will significantly unseat in market volume, market share. Once they do that, there might be a moment for repricing, but I can't. So this is like me putting my business hat on. I have to assume that they're not going to have that happen. So what I have to assume is that about $1 billion, maybe it's probably a little bit more than that, but $1 billion of vAero that's locked right now. I have to not look at how much asset value that is. And I have to look at kind of like the worst case scenarios of what the fees could go to, given the market, and then look at our market share. So all I care about of that $1 billion, maybe that $1 billion turns into 500 million, like halves, like it did earlier this year. But if I have 10% of that 500 million, I'm a much happier camper regardless. If I have 10% of 10 billion, I also will be a very happy camper. I'm not gonna lie. But my point is I'm still focusing on the percentage ownership rather than, or like percent management that we have. We don't have ownership over that, but like the people that are, what percentage is on our platform is really what I'm caring about. But yeah, that's the 5x would be insane to me. I just think the market's too stupid.
Like, what you said. So there are two aspects I want to comment on. The first is what you said. You are looking at percentage, and that is more kudos to you, because as if I'm looking at 40 acres and I'm talking to you as a founder of a project, I want you to think on those numbers on 10%, probably even going to 20%, right?
20%
that would be the bigger you grow on that, the more solid the project becomes as higher. Like, I think there will be some copycats coming out the bigger you get, right? But if you get 10 to 15% upfront, that would be very hard to beat. So that's part one. Yeah. And the part two is it's a reflexivity, right? So the Coinbase integrating Aerodrome at backend, right? So I'm not seeing price in isolation, volumes in isolations, or NFT market cap in isolation. They are all connected. So the more volume comes in, the more trading happens, the more fees happen, the more bigger the market cap. I mean, it's not rocket science, right? It's a dominant.
Yes. It all makes sense. I just like, I have to always think worst case, but yes, it does make sense why it's going to go to where it's going to go. When you look back at your statement about copycats, I'm not encouraging copycats, but working with VNFTs, there's a reason no one did it. I'm just letting you know, right? There's a reason no one did it. From a technical perspective, it's like, it's not an easy, if you fork it, I'd be impressed. Not even like our smart contracts are obviously verified. We have some, we have like what the some of the BUSL, so like business licensing, like you can't fork it and we'll sue you, whatever. But even if you use us as an inspiration, it's really hard to work with this asset. There's a lot of little nuances to each. Like Aerodrome has its own nuance that's different than Velodrome. They're not the same. Unlike how forks were back in like 2020, where like they were all just forks of Uniswap V2, which was they were identical and no one cared. They were just identical. But now, yeah, it's not an easy thing. There's only, we were doing the discussion in the chat I was in. There's only 3 protocols. There's four protocols that deal with V NFTs at all. There's OpenXSwap, there's Vexy, and then there's us and Autopilot. And of the 2, there's only 2 that actually deal with the fees, like deal with like the actual NFT. And there's a reason that's the case, and it's the reason that it requires so much effort to get it that way. So
yeah. I see it as you guys have got a pioneer's mindset, right? So this is so new, so exciting, and I'm so bullish because there was there was a serious gap in the market, and you went head on, address that gap, right? So a normal thing is you will have people coming in, but again, that's not what I'm focusing on. For me, the beauty about 40 acres is being able to borrow, right? So let's talk about what's the maximum. Say, for example, someone has got a hypothetically speaking, $2 million, 2 million Way Arrow NFT, which roughly generates $10,000 a week, give or take.
Okay. So go ahead. Sorry, go ahead.
So a million Arrow generates roughly about 5,000, if I've done my maths right. And if we are putting it at 2 million, roughly about $10,000 a week.
Yeah. So we do 2 ways. So we have two variables in how we underwrite risk. So we don't change one pretty often, which is the fees per week. So like how much does one Arrow make? So your example is for every million Arrow, you're going to make $5,000 per week. I don't know that isn't per one Arrow, but we'll just use that as that one right there. And so if you have 2 million, it makes $10,000 a week. Awesome. So we're going to say you make $10,000 a week. And we say, what are lenders? We work through a process of basically we wanted to get as closer and closer to about a year's worth of yield for the loan. And so we allow a 52-week cash advance right now. So if you make $10,000 per week, you times that by 52, you get $500,000. I'm sorry, I almost said 50,000, but you get $500,000 and give or take some. There's probably 2 I'm missing there, but $520,000 there. $520,000 in a credit line available immediately. Right now we have liquidity, so you can go onto our site if you have 2 million Arrow and get a $500,000 loan out and go about your business. Whether you're trading, whether you're paying for your lifestyle, whether you're doing whatever you want to do, you're good to go. Lenders will receive fees based on your rewards of that $10,000 each week, and they're more than happy to receive that because it's a very competitive rate for the lenders. And you don't have to do anything. You don't have to vote. We handle that voting for you if you want to. You don't have to worry about like claiming your fees or figuring out what's the best to vote on. We'll handle all that for the repayment cycle for you, and we manage all the accounting. So all the any like receipts you need for taxes, we send that to you. We can send that to you as well. Sorry, that's better way of putting it. Yeah.
So I just heard something that I'm not sure I understood that before. So did you say 52 weeks? Or 52, I thought it was. 50, I thought it was. Correct me. In my research, while playing around with 40 acres, I thought it was 8 weeks.
So when we started, we were at 8 weeks, and the fees were way higher. And so we launched in February. At basically an all-time high. I actually know the stat for this. So one Arrow was earning, I think it was maybe $1. We'll say it was $1 then, but it was earning 1 cent and like 1 cent and 1 cent 1/10. So 0.0113. I remember it like it was yesterday. So we launched there at 8 week multiplier, which I do need to update that in some of our docs, but that was about 15% at that point. So it was totally fine. Because you were earning like 45% on your total. And I was like, that's too risky. We're too young to do that right now. And we didn't have a lot of liquidity anyways. And so we launched at that, and we quickly went from $1 to 33 cents within like a month. And then the fees dropped off the Facebook cliff too. So the fees went from 1 cent to about 0.03, so like 0.3 of a cent, very like within a month range. So we had to update our update our fees per epoch, so the fees that I was talking about. So what we're projecting the fees to be, and then 2, we had to update the multiplier because slowly over time we've increased it over the past 7 months. We went from 8 weeks to that 52, which was always the goal, but to get a year's worth of yield. So that has been a goal we've expressed, but that took us 7 or 8 months to work our way up to 52 week multiplier. So yeah, that was a wild ride.
Putting it down to a normal, the same example for ease of understanding. So if your Aero NFT is generating $1,000 a week, you can get 52 weeks worth of loan, which would be roughly about $52,000.
Yes.
Okay, cool. Yeah. So that part is tied up. I'm going to ask you next question, which is, I think, very important for you to help us understand as users, right? Mm-hmm. What makes 40 Acres different from DeFi lending platform like Aave or Compound?
So the first thing is we accept VNFTs as collateral. The second thing is we're a peer-to-pool model, so we're similar to money markets, but more like a pool-to-pool model. But the big difference is we're non-liquidating. So on Aave, Morpho, Moonwell, I think those are the 3 on base right now that I can think of, or any other money market system. They rely on to make debtors or lenders. Sorry, they rely to make lenders whole on liquidation. So they have a whole process. So if your loan gets out of the correct range, they suggest. LTV is like loan to value ratio, gets out of kilter. They'll start selling some of your position to repay the lenders to bring it back into the correct LTV parameters. This has been going on for a whole bunch of years now. So at least since 2019, these have been prevalent, and they're the most used and most TVL lending platforms. As we talked about earlier in this conversation, VNFTs like Aero, Velo, do not fit well in the system. There is no deep liquidity of any kind for them on the secondary markets. You can't break them up into smaller pieces. And so you're left with having to find non-liquidating ways to give out loans. And so we chose cash flow-based lending for that reason.
Perfect. Thank you for that. And last 2 questions for you. So what's the interest rate? Is it variable? Is it fixed if I borrow, say, for example?
So the interest rate that the borrower is paying is variable. You can think of it in 2 ways. So you can actually map out like how long it'll take you to repay the loan, and then use either projections or just you can use the static amount each week. It's going to change a lot in the 52-week range, but you can project out how much the APR is. I give a range. It's usually 12 to 30%, depending on the fees. That's really what you're dictating. How much fees are you giving up to pay for the loan? The lower the fees, it's actually the better the rate, which is not ironic, but it's counterintuitive to a lot of people, because when you have higher fees, you're paying faster, which means you're paying a higher APR because you're going to finish the loan much quicker. So it's better for the lenders when the fees are higher, and you just feel better, obviously, when the fees are higher. But it's not actually the best APR. The way I was thinking about it at the beginning, but we've had to move towards that APR side of things just to make it easier for more people can wrap their head around that. But I like thinking about the cost of capital. So we charge 25% fees on the rewards each week, and I think of that a little bit. I think that's a better way to look at your cost to borrow. Is say that the Aero is going to earn 25% APR this year, annualized, and so you're going to give up 5% of that to pay for your loan. So instead of earning 25% at the end of the year, you're going to earn 20%. To pay for the loan that you've taken out. I think that's a lot easier way to understand it, because that's always going to be the same. Basically, whatever your average APR is over the year, it will be 25% of that will go towards fees. And so you can kind of get an idea of like how much you're losing in yield for the loan. If it's a lifestyle loan or if it's a trading loan, it's a little bit different for trading, but trading loan as well. So you get an idea of what you're going to give up for the opportunity. So.
And turning it around, so if I'm a lender, what yield would I be getting from that point of view?
Yeah, so lenders, to go back to that 25% fee on your rewards, lenders get 20% of that, and that goes to them each week. That varies. So the lenders are kind of in it with the Aero holders because they don't know how much they're going to get paid each week. They're just betting on the fees being really good. And so far, the fees have been really good for the lenders. I think our vault has averaged 14% APR since inception. At the very beginning, when it was overutilized, it was something like 40%. And the fees were much better than too. The fees were really good then too. So it was they're getting paid from the rewards, the fees that the Aero is generating, and that's their compensation each week. And the 5% that I did mention, so 20% goes to lenders, the other 5 goes to the protocol 40 acres. So.
Perfect. And my last question, who benefits most from using 40 acres? Is it the borrowers, lenders, or both? And how do they benefit?
I like to say both, but in reality, the borrowers are the ones benefiting the most by a lot. They have access to liquidity in pretty good size for the most part for assets that were could not work in the greater DeFi ecosystem. Is the better way of putting that. And what was the second part of your question? Sorry.
Who benefits the most and why?
Oh, who benefits the most and why? Okay. Why? So the borrowers, just going to keep with borrowers. Borrowers are getting so outside of the borrowing, I actually think that 40 acres and is now providing tools for VNFT holders in general to have more control over their strategies and positions in automated ways. So we do provide loans, and that's our bread and butter. That's where we make all of the money that the lenders receive, the protocol receive. But the things that I think are really, really cool is like we have this custom relayer set up, and the borrowers can use that a little bit too. But you're able to automate all of your strategy with your voting. You're able to automate all of your strategy with how you're claiming the rewards. So if you want to get, make a position in Bitcoin, you can have it all swapped out at the end of your every epoch into Bitcoin for you, or Bitcoin to USDC, or you want to get a little Bitcoin and have it reinvest back into your position. Some of your, like a percentage of your position, you can do all these things. That's automated. And that before it was a manual process that it took a lot of time for a lot of people if they had more than about 2 NFTs, myself included. It took me probably half hour to an hour to do that. And it's a really simple task, but it's a very tedious task, especially we got OPSEC, you have your ledger, you got, multi-sig, all that good jazz. It's not easy. It's not like a hot wallet. So that's been really fun. And then we're giving other data that you weren't able to get as well, which is like historical voting data, historical yield, or like where you voted over the past, I don't know, however long you've been in 40 acres. It's been really cool too. So there's like a lot of little things that we're allowing borrowers, but the greater VNFT ecosystem to have access to that they did not have access to before, or was very difficult to do. I don't know if you had this, but I had a spreadsheet. I've had a spreadsheet for 2 years. So 2023, I started a spreadsheet for my Velo and Vero yield per week because there's no way to track that. And I've managed that basically until I got 48. We made 40 acres. I had it for 2023, 2024, and the beginning of 2025. I was tracking my weekly returns because there's no easy way to do that otherwise. Yeah.
I think like every good thing, this podcast is coming to an end, and I'm going to let you go with a promise that we are doing a live demo on 40 acres coming out pretty soon. So we'll be sharing the experience of how to actually use it. Because I think, Chris, most of the people, the comments, the inquiries that we get is they understand the theory aspect, but it's really helpful to have a tutorial hand down, and it makes so much sense. So we create a lot more value for our viewers and you for your users by doing that.
Sweet. You want me beyond that, or is that you guys something you guys do at Digital Dunya?
I am happy to do 5 to 7 minutes walkthrough by myself, but we can do something more nuanced, explaining different features if you're up.
I'm totally up for it. We'll see if we can make it happen. That'd be fun. Either way, if you guys do it yourself, that's awesome. It's always fun to see how users are using 40 acres because I learned so much from it. I learned a lot from it, so it's awesome. Yeah.
Cool. So on finishing note, Chris, how was your experience on Digital Dunya?
It was really good. Are we still recording right now, or are we done recording?
Yeah. Final.
Oh, okay, cool. Yeah, it's been awesome. Digital Dunya is, you got some good questions. It's been just fun talking about random things that I don't think about or don't have to talk about all the time, like my where I grew up in the South versus the Midwest. And then I talk about nuclear sometimes, but it's not something I dive deep into, like how I began from nuclear to crypto. So I did like the throwback. So that was fun.
Thank you for joining us, and I really appreciate your time. World travels very fast, so 6 months is more like 10 years. So hopefully we'll circle back in 6 to 12 months and talk about something more exciting, because what you're building, I honestly believe that if everything falls in one after the other and you keep on doing the hard work that you've been doing so far, onwards and upwards to much better things that I think more than you can imagine.
I would love that. And right now, it's been a fun ride. I didn't mention this earlier, but I basically work with two of my best friends, and it's been an awesome time to just build with them. So it's awesome. Yeah.